Do you want to know how the stock market works? Investing in the stock market looks like a difficult thing for young people who are not earning a good amount of money at the moment. Many people believe that you need a big chunk of money in order to think about investing in the stock market. Also, you need a big heart in order to bear the risk. Actually, it is true up to some extent, but there are a lot of people who have built massive wealth by starting investing with little amount, and you can convert your small amount into big once you know how the stock market works. Not only that, but you can also take huge benefits from the risk that other people fear. Understanding the stock market is easier than you think. Hello 101 community, welcome back to our YouTube channel. In this video, we are going to explain you how the stock market works. However, we will also discuss how you can earn money by investing in stocks, so make sure to watch this video until the end. But before we begin, if you are new here, make sure to subscribe to our channel and turn on notifications to never miss any updates. So let's start. So what do you need to know to get started with stocks? If we compare the current stock market with the old one, it has become significantly different and advanced. You must understand the workings of the modern stock market. Let's take an example here. A new company wants to introduce itself in the market. First of all, the company will try to promote itself to big investors. If the investors like the idea and think that there is potential, they will put the first investment and sponsor the company's IPO, or initial public offering. This step will officially introduce the company to the public market, and if any person thinks that the company is profitable, they can buy a stock. If you don't have any idea what the stock is, it is actually a type of security that indicates proportionate ownership in the issuing corporation. Another important point to understand is that the investment of shareholders will help the company grow and achieve its objectives, whereas they will get a certain portion of the portion in return. You should also know how you are going to trade stocks and how to open a brokerage account. Some investors want to get actively involved in this market, while some want to just buy and forget it. There are some online investment applications that you can use like Webull, Acorns, Betterment, Fidelity, and many more. What are the best ways to learn how to invest and start trading? You might have an idea that when you own a stock, it means that you own a portion of the company, and the value of the company increases, and the price of your stock will also go high. There are also common and preferred stocks that are offered to shareholders. Actually, the benefit of common shares is that you get the voting right, whereas in preferred shares, you don't get any voting right, but the company pays you to profit or dividend at preference, and they also get the preference in other financial situations. There are plenty of best ways to invest in stocks and how you can trade stocks. The first thing you must keep in mind is that you are not a jack of all trades. You don't know that many investors have lost millions of dollars, and you can get their advice for free. There are also a couple of things like you have to research well which sectors you must invest in and the history of the company in which you are going to invest your money, and try to avoid individual stocks if you are a novice investor. Also, try to avoid short-term trading. You can open a brokerage account either online or manually and start your journey. Also, you should be ready for a market downturn because this is the normal routine. But a lot of investors lose interest and make even worse decisions during these conditions. How do stocks works? A quick summary. You might have the question, why companies sell a stock in mind? The answer is pretty simple. In order to raise capital, the modern stock market often bases the value of the corporation on its potential earnings. There is no doubt that a relatively small company can also earn millions or even billions of dollars if the investors trust the company that it will grow in the future. So, if the company wants to do it, it needs a platform or place to proceed like the stock market. Actually, the company sells the shares through an IPO on an exchange, and this also modifies the status of the company from private to a public company. You may also want to know about securities, which is a certificate or other financial instrument that has some value and that can be traded in the market. The securities can be categorized into two. One is mostly known as equity securities like stocks, and the other is known as debt securities like bonds. If you liked the video so far, press the like button and subscribe to the channel. Also, if you want to develop yourself financially and want to take your future into your own hands, check the links in the video description. What is the meaning of market crash? This is actually a term that is very painful for many investors. During a market crash, the price of the stocks suddenly goes down, and the investor loses interest due to the fear of losing investment. Most investors try to sell their stocks even at a lower price. A market crash can be a side effect of a major economic disaster. What is the difference between a bear market and a bull market? If you are getting into stocks, you will hear two common terms. One is a bear market and the other is a bull market. If you have a question in mind about bear markets versus bull markets, actually these two terms show how the stock is going in general, or if they are appreciating or depreciating. Actually, the behavior of the investors has a strong impact on the market, so these two terms actually show you what and how the investor is thinking about the market. If we talk about the bull market, it actually represents a great situation of the market in simple words. You can say that when the market is on the rise and the condition of the economy is going great, you can say that it's a bull market. So whenever you hear the term bull market, you should understand that the price of the stocks is going upward, and most investors generally think that this trend will go on for the long term. On the other hand, if we talk about a bear market, it is a condition where the prices or the value of the stocks are going down. In simple words, you can also say that the economy of the country is not performing well. If you heard the term bear market, you must understand the fact that prices or the value of the stocks are going down. But one thing you must keep in mind is that a market is never considered a bear market unless it has plunged 20% or more from its recent peak situation. How do I know if a company is good for investment? Tips and strategies for choosing investment wisely. An investor does not purchase the shares of the company before studying its history and searching for details about how the company is performing in the last few years. This gives you a good idea about whether you should invest in the company or not. There is one strategy that you must adopt if you don't want to face a huge loss. That is portfolio diversification. I will give you an example here. For instance, you put all your money in just technological company stocks, and after some time, due to any reason, the prices of the tech stocks go down, and you will waste all your money. This would never be a great strategy. So what you should do is you must have a diversified portfolio, which means that you should buy some stocks of tech companies, some stocks of the pharmaceutical sector, and you should also invest your money in real estate as well. This will help in reducing the level of risks, and if the value of one sector goes down, you will have trust in the other sectors. Outro. Investing in stocks does not mean that you must invest all your earnings or salary into the stocks. If you do this, remember that you are going to make a major mistake. If you think that you cannot take a lot of risks, you can either start investing just 1% of your salary per month, and then you can increase the level of investment over time. If you buy and hold for a long time, you can make more profit as compared to holding it for a short term. This is the best tip for you. That's all for today's video. I hope you enjoyed it. If you want to see more videos like this, subscribe to our channel and click on the bell icon so you'll be notified of every update. Also, don't forget to check the links in the video description. And while you're here, click to watch one of these two videos appearing on your screen right now. I'll see you there. Take care and stay tuned.